Hello, this is Brian Shannon from Alpha Trends. Today is Tuesday, actually it's Wednesday, the 2nd of April, 2008. And the market's closed. S&P 500 finished with a gain of a nickel. So we had a big rally yesterday, and the market held on impressively to those gains. Again, we have broken this downtrend line here on the S&P 500, and we are above that 50-day moving average as well. And we also are in a position where most people who've been involved in the market this year should be in a winning position. That is, if they made fresh purchases this year. The average price that this market has traded at since January 1st is right here at about 134.80 or so. The average price since the January lows is about 133.60. So you can clearly see that this market is making some progress to the upside in here, and it's definitely taken on a much more neutral look to it. And I don't think we're really in a big danger of massive sell-off like we were. So with that said, though, we do have earnings coming out today after the bell. We have Research in Motion. We'll see how the market responds to that. Let's take a look at the S&P 500. First, I want to look at a 2-day chart with the VWAP on there. And what you'll notice is this is yesterday's VWAP, and then with today's prices averaged in as well, we do continue to hold on to the average price from yesterday. So the 2-day VWAP found support late day here today as this market pulled back. And on the 1-minute time frame, you can see it was just kind of chopping back and forth above and below. When we look at the 10-minute time frame, we saw that the market had gotten up to this 130, just under 138 or so, and we saw then a first lower high here, then another lower high. This market, it made a lower low as well. So that's when the sellers really took control in the afternoon from from looking at the 10-minute or even the 5-minute time frame here. This first lower high, and first lower low, then another lower high. So the sellers were in there today, but the market finished higher, and more importantly, it's above the average price over the last 2 days. When we look at the 30-minute time frame, again, this level is going to continue to be important going forward, near that 134.5 to 135 level, but more, the fresher level that should hold as support is right about 135.90 or so. And it looks like we might have seen what looks like a test of that level. We do have a rising 5-day moving average in here again today. So there's been a lot more volatility in this market. It's not represented by the volatility index, but just price movement back and forth, percentage-wise. So the market is making ground in here, and it's definitely turned a lot more neutral. So we'll continue to look for I think 135.50 as the more important level of important support right now. And if it pierces that level, then I think we've got the potential for down near about 134.60 or so. And on the upside, we have, looking at this hourly time frame, we've got these levels here that 139.5, about 139 to 139.5 looks like a level that if this market backs up a little bit further, perhaps down towards that level, then it may make another thrust higher up towards that potential level of resistance near 139 or so. When we look at the XLF, we can see that this market has also taken on a more neutral look to it. It still hasn't broken above this downtrend line, and looks like it was kind of testing that once again today. This is the second day that it's closed above the 50-day moving average, and this 50-day moving average is starting to flatten out also. More importantly, we are back above this 2620 level that had given us so much trouble as far as when we back it up a little bit further on the let's look at that hourly time frame. This 2620 level, though, has been a heavily contended area over the last month or so. First is support in here, then as we saw resistance. Looked like it was going to hold a support there. It broke down and broke right up through that level yesterday. I kind of wish we would see a higher high here, but you could kind of look at this and maybe say that this XLF is tracing out this inverted head and shoulders pattern on the hourly time frame. If that's the case, just measuring real conservatively, let's call the head of this pattern 23 and go up to the neckline. And we'll be conservative there as well and just call it 27. So that would be 4 points. Add that to the break of the $27 level. Perhaps we see a move up to 31. I think it would take a lot of people off guard. That would put it, testing the 200-day moving average. It's not a prediction, but it's a possibility, and you have to be aware of all possibilities in the market. If you're trying to predict the market and say here's what's going to happen, you're going to find yourself stubbornly holding on to the wrong side. You can argue with price all you want, but the market's going to win in the end, and that's what the bears are finding out here recently in the financials, that the buyers keep coming back in here, and the volume increases on these rallies relative to the decline. So we're seeing net inflows, it appears, into the financials. But again, you have to look at it though and can't get too excited, because it does still come within the context of a bigger downtrend. So if you're a short-term trader, there's certainly some opportunities in here. Right now, when we look at the 5-minute time frame, you can see this first lower high. We broke to a lower low right there. That's where the sellers took control for the rest of the day, as this prior little level of support acted as resistance here late in the day. But this market did hold also above that 2-day VWAP as well. So mixed signals in here again, and that's going to be the case for a while as this market searches for the support and kind of turns more neutral in here. I would expect we're going to continue to just kind of chop back and forth. But again, you always have to be prepared for anything, so that you're not caught off guard if the market decides to just make a huge rally for whatever reason. Maybe it gets excited about some of these earnings reports. Who knows? The average price in the Russell 2000 since the January lows is right here near that 50-day moving average, which, if you look, is starting to advance. So we've got an advancing 50-day moving average, and we've got the average price since the beginning of this year right at about $69.50 a share. If we look at the 30-minute time frame, you see that again this 68.5 to 60. Let me get that off the VWAP tool. If the 68.5 to $69 level had been this important level that was tested as support in here, and now that we're comfortably above it again, we're going to start to look for these levels to act as support. And the market came down close to that level, near about 70.5. I think below 70.5. You've got probably maybe even 70 even, and then near that 5-day moving average, which is rising. So this is looking more bullish. You can see that the action over the last 3 weeks has clearly been bullish here in the Russell 2000. This market also came down, touched on that 2-day VWAP here late in the day, and did manage to bounce somewhat from it. From the 1-day perspective, though, you can see that it was just kind of back and forth. The market did close with a 25 basis point percentage gain, though. So, work continues to be made in this bottoming process. The key level that will that I think is going to be real important for this market going forward will continue to be that $72.5 to $73 level. That's the level the market broke down from hard in January and was tested as resistance. So that's bigger picture. You could say that we're in a range of 64 to 73, but obviously there's a lot of opportunity within those ranges if you have the capacity to trade on these shorter term time frames. And by that I mean capacity, if you have the tools necessary, and also the time and patience and skill set necessary to trade on the intraday time frames. The Nasdaq 100, again, this market is it was down a dime today, but basically it's showing the most strength overall. We've got that 10-day moving average crossed up through the 50, and here comes the 20 as well. So I think on the next pullback, the next pullback ought to probably hold, I would think, near about 44.5 or so. We know that that 44.5 level was important back here late in February, before the market sold off hard, and then this 43.5 held very impressively while the other markets were kind of breaking down through support levels. The Nasdaq 100 held above the 43.50. Yesterday I was saying that the next potential level of resistance was that 46 level. We got just above that, and the way you want to look at that 46 level is not to sell short exactly at 43 just because we've seen resistance there in the past. But instead, when you see the market approaching that level, it appears as though maybe it's overbought. Then you want to look at these shorter term time frames. You see that, we've still got this pattern of higher highs as it hits that level. The market comes down, makes another higher low, but then it fails to confirm that higher low. It makes this lower high. So if you were to sell short the Qs today, the proper place to do it would be on a break below that low. So when it makes this first lower high and then confirms it with a lower low, that's when the sellers took control for the day. You can see that they defended that level as this prior level of support in here acted as resistance late in the day. And if you missed the first entry, then selling short as the market, and let's just take a look at it on a shorter term time frame, maybe even just breaking below that level here after it came back and tested that declining VWAP. But you want to look at the larger term time frame to see where the potential for a market to turn, where there's the potential for supply to be released. And a lot of times it's where the market has found resistance in the past as well, like we saw today at this $46 level. I didn't draw that too well, so let me just redo that. But this $46 level clearly is significant. So, what I would love to see would be maybe a pullback towards that 44.5 on low, declining volume the next couple days. That might be able to build enough energy for another rally higher.